Hello, this is Michael Loftus with Wealth and Wisdom TV, and welcome to podcast number 15. First time here, I'm a practicing financial advisor. We do podcasts like you're seeing here today. Latest market updates, you can click up here or down below, and other educational videos. So if you like what you hear, please do consider subscribing. So podcast number 15, we like to start off with a little quote. Don't let money run your life. Let money help you run your life better. And that is John Rampton. And I do like that one. Hopefully you did as well. So here we are, February in the heart of winter. Doesn't feel like it. Going to be 55 here in the Northeast. But I want to go big picture here today. Talk about some topics that, I get questions about. So let's dig into it. First up, 2024 housing prices. What are you looking at? Well, I always say that housing is very regional. Now, I've got offices in two beach communities, Bethany Beach, Ponte Vedra, Florida. All right, now across the country, you've got parts of the country that are really starting to break down. Austin, Nashville, Las Vegas, places that really build up. That's all coming from what I think is going to be an Airbnb bust. Now, that being said, prices are really stable, okay? You're not seeing a lot of price movement. Why? Simply because not a lot of inventory, right? People are locked into their mortgage, 2.5%, 3.5%. You're going to sell, go to another home at what? Today I saw 6.75%. That's a massive increase. So for now, because of that, that has stabilized prices across the country. I know for here in Bethany Beach, we are still seeing some price increases because there is such a limited amount of inventory. So next up, chances of a recession. Boy, I haven't had that question before. So let's talk about it from a macro standpoint. We don't see it, okay? When you're looking at some of the data we just updated last weekend, and it doesn't look to be in our forecast. Why? We talked about this in other videos where last year we had the Treasury really pump a lot of liquidity in the market, and that really helped the overall economy. Now, that being said, there's been an article saying we're not going to have a recession, but it sure does feel like one. Because let me tell you, those folks, middle America, a lot of people are struggling, right? Inflation is really hurting them, taking more than one job, in some cases 3 jobs. So it may not be a recession. It could feel like a recession. Now, could that change? Sure. But as of today, we do feel that we're going to avoid the overall recession. So the stock market in 2024, well, here's the thing, right? 2023, a lot of people didn't expect much, and we know what happened. 2024, everyone's riding the wave and way too excited, in my opinion. So I think it depends. First off, we have gone a long way, like I said, without a lot of market breadth, right? We've heard about the Mag 7 ad nauseum, right? But right now, early in the year, it's the Mag 4. Meta, Microsoft, Amazon, and NVIDIA driving this market. I mean, they are the majority of all the gains this year. That's not good. That is not showing a strong market. Also, earnings have not been that good. Now, that being said, look, this is uniquely American right now. Okay, we're up. When you look at other parts of the world, it's not happening. So that being said, again, I feel we're overbought in the S&P as of today. I'm recording this February the 8th. And I think that we're due and overdue for some type of pullback. Is it 10? Is it 12%? Who knows? But that could be a good buying opportunity. So next up, what do we have? That's it for the big picture, all right? So let's move on to our next topic, all right? Are your good money habits holding you back? Ooh, little tongue-tied there. Sorry about that. So have a few topics here, right? Keeping to a strict budget, right? We all have to do it. I do it for my business. At the beginning of the year, I go through it. I went through. Quite frankly, I was really surprised because, right, inflation. There's so many things that have gone up last year. How about healthcare? 20%, right? All my software, just left and right. Looking at your budget, going through it, it really is important. A lot of the financial websites, your bank websites, you can do it right there. Fidelity is our custodian. You can create one there. Big believer in working on a budget, and that can help you on your long-term plan. So absolutely take a look at that. Investing in familiar stocks. Now, Peter Lynch, the old Fidelity money manager, very famous back in the day, he always would say, buy what you own, right? Now, I was talking to some potential clients today, and they have 3 different portfolios, and they're all the same, and they're all large cap growth, okay? And that's not good, right? One, a lot of risk if it's all the same in 3 different accounts, right? So I think that, yes, buy things you know, but there's a lot out there. We talked about being overbought in the S&P and the NASDAQ, but there's still a lot of other opportunities out there to go outside the box. We've got a research firm we utilize. We have a very detailed process. But, today alone, right, we added a uranium stock. We added a mortgage company the other day. We added a cruise liner. There's a lot of opportunity there that has more upside than we see in the S&P at present. Embracing automation. Well, I love technology. I have absolutely no problem with that. But we do have a lot of clients that do. But boy, it does make your life easier. So I highly recommend all your bills, mortgages, credit cards, whatever. I mean, everything I have is automated. I also have it all automated going through my American Express to get those points, right? Because it'll make your life simpler overall, right? And then whether you use, now for my business, I use QuickBooks. There's other programs out there that you can use, again, to go back to the budgeting idea, right? So automation's a good thing, but highly recommend a password program. Okay, I use 1Password. I've used it for years. I can share that so my wife has access, my staff has access, and there's other ones out there, 1Pass. You can look that up. But if you do it, make sure you have those passwords, okay, protected. You're changing them and making them long as well. Patience getting into the stock market. Well, that's an interesting one. Right now, there's a record amount of cash on the sidelines. Not surprising because you can get 5.25% in some cases, okay? So the problem is sometimes you miss it, right? Had a client last year went to cash, and some of these moves we're seeing has missed that as well. So at some point, look, it's very difficult to time the market, right? But I do believe that you can look at, the ebbs and flows and find opportunities. Today, one of our holdings had a pullback. To me, that was an opportunity to buy. For clients that didn't have that, newer clients that did not have that holding, I added it to their portfolio. So, yeah, patience is good sometimes. But, again, for us, we do have a system. This is what we do. And we're looking at when the markets break down, when they break up, and these give us our entry points. So if you're too patient, you're going to miss that opportunity. All right, next one. Staying informed by watching and reading financial news. Now, that does not include Wealth and Wisdom TV. All right, that's to start things off here. Obviously, you want to be informed, and you can watch CNBC, Fox Business, Bloomberg, whatever's right for you. My gosh, there's so many other YouTube channels. Obviously, your favorite is mine, right? All kinds of information, in some cases, information overload, right? But you got to be careful, right? First off, all the big stations, right? CNBC, they're in a business to sell advertising. You have to be careful. So many stories about them. I mean, I hate to use the word, not like pumping, but really like getting hyped about a stock, right? And they can move the markets, right? A lot of people watch a show and will start buying it, right? So just make sure you have a valid research platform to help you make decisions. Again, whether using an advisor or doing it yourself, use all that information with a grain of salt and dig in and make sure either your advisor has a good process or you have a good process. Patience. I guess that's the word of the day. Making a financial decisions and plan and building a plan, okay? So, I always say we don't plan to fail, we fail to plan, all right? At some point, you have to do a financial plan and look to the forward. Speaking with a long-term client today, I've been trying to get him to fill out the information to do his financial plan. Now he's talking about selling a business. I'm like, look, you got to do this so you have peace of mind, so you know what's going on, okay? So forget about the patience. Get started. You can click below for a link with us, right? Find somebody to do that financial plan, but it really is a critical part of your overall wealth, right? I mean, we do the money management, we do financial planning and tax planning. So it's real important, okay, that you get started sooner than later to give you clarity and peace of mind. Next up, mailbox. All right, mailbox. Always like these questions coming from our viewers from around the country. So first up, we have Jacob, who is age 67. I've reached full retirement age for Social Security, call that FRA, but I don't have plans to retire anytime soon. Should I go ahead and start my Social Security now or just wait until I'm done working? Well, the obvious is I don't know your full situation. Going back to what I just said, that's exactly why we do a financial plan, right? We look at the best time. I don't know if you're married, right? Not married. So that also factors in the thing. Who has a higher Social Security number, okay? Now, I will say that big picture, we have seen clients in the last couple of years with inflation rising, right? The COLA, cost of living increase, were pretty substantial. You know, if you delay, like if you take it 62, it's the lowest amount. So each year you delay, it's basically an 8% bump. But then you've added in some of these inflation bumps we've had the last couple of years. And I've told clients who are now 65, 66, start taking it now because it's way more than we originally planned 3 years ago. But again, talk with your planner, give us a call, make sure you make the best informed decision. All right, Megan, my dad is in his 90s. Health is starting to decline. Would it be wise for him to start gifting money to me and sister while he's still alive so he doesn't have to deal with too much estate tax? We've also talked about him signing over his house to us. Oh, that's a whole nother one. So a couple things. One, okay, so at 90, really probably should have started doing that earlier. One thing I talk about with a lot of our high net wealth clients in their 70s who aren't using the money, it really is a good time to start gifting at that moment because one, you get it out of your state, but you could probably make a bigger impact, right? Think about your kids, you know, if they're Gen X or millennials or whatever the case might be. We know the cost of housing is the highest at all times, so it really could be impactful right now. So getting into the age issue, so you have to be careful. So I don't know the entire estate, what the size is, because you know, you also can get into what's called a 5-year look back when it comes, you know, if there's any type of health issues and or they're going to claw it back and things like that. That's for a whole nother video in and of itself. But again, that's why you do a plan to make sure you're doing it at the right time. Talked about him signing over his house to us now. No, because if you wait and he passes, you get a stepped up cost basis, right? So if you paid $300,000, it's now worth $600,000. It steps up at the highest number. So if you do it now, right, you have potential tax situation. So I would not recommend doing that now. Next up, we have Alex. Thanks for sending us a message. My brother told me there's a law a few years ago that now forces my kids to take a lot of money out of my IRA in the first 10 years after I die. Is there any way I can avoid this? So we used to have a great option called the stretch IRA or decedent IRA, where if you were to pass on, it would go to your kids, grandkids, whatever, and they could stretch, continue it through their lifetime. Awesome option. That's been taken away. It is now a 10-year option. So basically, upon death, you have 10 years to liquidate that. So you want to make sure, again, speaking with your advisor, plan it out yourself, do it over time, do it for tax reasons, because you want to balance, right? You want it to continue to grow, and you don't want to take big tax hits, right? So if you have a $250,000 IRA, right, you want to inherit that all at once and cash it out? No, because you would lose probably 40% to taxes alone. So the 10-year actually gives you time to plan, right, as you go forward. And also, you can take more if you choose. We'll pay taxes, but again, not really ways around that. So can't really handle that. So next up, Danielle. My son graduated from college. His grandfather, my dad, gave him $10,000 as a gift, told him to start using investing. My son asked me what to do with it, and I'm not surely what. What would you tell him? Crypto. No, I'm just kidding. Right? That's what most people do, right? They're going in there and getting crazy. I think like anything else, I've got several of our clients' grandkids, and maybe they haven't used their 529s, and I try to do my best to educate them about the markets, buying stocks, why it makes sense for the long term. So I think if you're going to do it, right, if you do $10,000, you have to start somewhere. I'd probably break it up into 4 different areas. Now, it could be an ETF, it could be stocks, whatever the case might be. Depends on where you are at what time, what his age is, what his interests are, right? If he has certain interests, maybe he likes green, so you buy solar, right? It just depends. So the answer is great, awesome, get started, come up with a plan, and I would break it into a couple different stocks. Once you start making money, hopefully you do, okay, you start taking those profits and then you start buying other stocks, right? That's how you diversify. But also, you should always have a sell discipline as well. So that's it. As always, thanks so much for watching and listening. This is Michael Loftus for Wealth and Wisdom TV and podcast.